Good morning. We're going to take a little bit longer term view on the euro and just go through the monthly and the weekly charts before going on to the dailies. Now obviously we know that the primary trend in the euro is down, the secondary trend is down, the minor trend, well, it's basically down but sideways. Now this, where we topped out in 2008 to where we based in 2016, we hit the 38.2 at 125 and we double topped there and down we've come. Now Friday we hit that line there at 107. That line came in at 34. Our low was 107.44. So now what I've done, I've put on monthly, weekly and daily pivot points, and the reason for doing that at the beginning of the month is just to give you an idea of where they are. So we've got the monthly pivot, it's the red line here, that's coming in at 109.65. The weekly pivot you can't actually see because it's underneath there, and that's coming at 109.62, and your daily pivot is coming in at 110.01. So we are above all of the pivot points that we use on a monthly, weekly, daily basis. Now if I scroll this out to the weekly chart, you can see where we had a really good bounce here when the world was looking like it was going to collapse. Here is where we went lower to that 107.77 and we bounded back to close just above that trend line I've got in there, and Friday, as you can see, we went up. Now what we're going to do, I'm going to put on a Fibonacci level from here where we hit the 38.2 on the monthly to Friday's low. And what we try to do here is marry up some of the resistance points with the fib levels. Now we can see over here our first fib level on this big large move down is 112.02. This is on the weekly chart. Okay, we are above the 9 and the 21 weekly period moving averages. The 55 week moving average is at 111.37. So if we look at all our indicators as well on the weekly and the monthly, they are looking to trade to turn so that we trade higher. So now we're going to take a look at the daily. So what we do on the daily is we just, for short term, let's put a fib on here. So you can see that the next level of resistance that we have is up at the 200-day moving average, which is at 110.98. And that coincides with this 70% Fibonacci level, and that's coming in at 111.01. So there's very, very little in it. So I'm long of the euro. I'm going to be looking to close out on a rise to here. I'm long all the way down here. So I'm closing out my long positions up at these higher levels. And then think again, because if you look, you can see the daily stochastics are extremely overbought at 95%. And when that red line hits 90%, you can be sure that the market is in for a bit of a turn. Now looking further out at the weekly and the monthly charts, you can see that the market is just beginning to turn higher. So the expectation is that we hit that 70% and the 200-day moving average to ease the short-term daily overbought scenario. We should then be able to come back to the daily pivot at 110 and the weekly and the monthly pivots down at 109.62, respectively. Now if you look at the 38.2, you can see that's coming in at 109.55, and the low on Friday was at 109.51. So anywhere around this area you'd be wanting to place long positions. You can keep the stops extremely tight. If we go below this low here, which is 109.51, we go below it, we've got this little bit here at 109.25. So we go below here, we're out looking then to rebuy in this area here where this line intersects with the 9 and 21 day moving average, which is at 109.07, the 9 day, and 109.14, the 21 day. So we know, you know, when you're trading this market constantly like we are, you get to know the level. So straight off the top of your head, you've got that 23.6, but you know that there is support at 108.80. You know there's support at 108.20. You know there's support at 107.80. So you can judge where to go in and buy this. You know, the other day when it broke 108, there was so much news coming out about the euro plunging to parity. And it's like, well, okay, it will do if certain things are in place, and those things weren't in place. You know, the market was extremely oversold, though it was just beginning to turn higher. You had brilliant support down there, and it was, you know, it was a no-brainer to actually go in and buy the market. It was a no-brainer. So even with no-brainers, you have to put stops in. Okay, so our stop was quite a bit lower. You know, because if you're wrong, you want to be wrong. You don't want to get stopped out and the thing go like it's done 300 points higher. That would really get to you. So watch that 200-day moving average. It's an extremely good indicator and it's extremely good resistance. So watch that and know where your levels are to buy. And it is down in this area here. Okay, good luck. I hope I haven't bored you too much. And markets.com, I will catch you next week. My guys, I'll catch you in a bit.